Now, there's all that and more in Aftershock, and hopefully you'll soon find out. Now, the book begins with the financial crisis, the worst since the 1930s. But it's mainly about the world after the crisis, the dangers and the opportunities ahead. Not so long ago, we looked set for another Great Depression. But unlike in the 1930s, governments and central banks rode to the rescue. They propped up the banking system, they slashed interest rates to zero, they pumped loads of money into the economy, and they injected a fiscal stimulus. And it certainly helped. But we were also lucky. We came perilously close to financial Armageddon. And here we are now. Bankers' bonuses are back, house prices are soaring, while unemployment is rising, and debts pile up, and frictions with China are mounting, and the planet is overheating. Is this really sustainable? I believe that unless we change course, we could suffer an even bigger crisis for which our over-indebted governments could not save us. Next time, our luck may run out. Now, to experience a depression, you don't need to travel back in time. Volcano ash permitting, Iceland is only a 3-hour flight. And there, I met an unlikely property speculator called Thorvaldur Thorvaldsson. He's a carpenter. And you'll see to his left behind him, there's a bust of Lenin. In fact, everything about him is red. His shirt, his t-shirt, even his hair. Yet even he got carried away by the financial frenzy that gripped Iceland in the years before the crisis. And since that crisis, houses have halved in value, so has the currency, the stock market has fallen by more than 90%, consumer spending has fallen by a third, and so has government spending. And in the UK and the Dutch governments are demanding that ordinary Icelanders foot the bill for the collapse of IceSave, the Internet Savings Bank. Every man, woman and child in Iceland is expected to foot the bill, £11,000 each. And no wonder then that they protest that they have become ice slaves. Now, Iceland is a weird and wonderful place, and if you haven't been, you should, especially now because they need all the money that they can get. And when its banks collapsed, the internet buzzed with jokes like, "What's the capital of Iceland? $20. And it does seem laughable that a country with a population smaller than Camden and Islington combined became a global financial centre. But worryingly, Britain is more like Iceland than many people realise. Willem Buiter, my former colleague at the European Institute, calls London Reykjavik on Thames. Because while Iceland's banks grew so big that their often dodgy assets came to be 9 times as large as the whole economy, in Britain's case, they're 5 times as large as our economy. Royal Bank of Scotland alone had assets worth more than 166% of UK GDP. And when Gordon Brown stepped in to save the banks, he in effect pledged all of our future incomes as collateral against banks' losses. If the economy had plunged into depression, he could have lumbered British taxpayers with an Icelandic-sized bill. And then since the crisis, the big banks have got even bigger, even riskier, while governments' capacities to borrow has shrunk. So Iceland is a warning of what could happen to us if the bailed out banks that were deemed too big to fail one day prove too big to save. Now, it may be reassuring to think that the crisis was a once-in-a-lifetime event, but in fact bubbles have been getting bigger, broader and more common recently. At the height of Japan's bubble in the late 1990s, the grounds of the Imperial Palace in Tokyo were more expensive than the whole of California. During the dot-com bubble in the late 90s, internet companies reached absurd valuations. And during the recent bubble, the biggest and most global in history, house prices in America nearly trebled, in Britain they more than trebled, and in Ireland they quadrupled. And that bubble involved a toxic combination of rampant property speculation, an unprecedented increase in personal debt, and banks who borrowed too much, lent far too easily, and spawned devilish new financial products that sucked in cash from global investors in complex and opaque ways. Basically, banks placed and enabled others to place bets on top of bets on top of bets. And at each turn, they earned a juicy commission. Now, the details of the crisis are extremely complex, but the underlying story is simple and familiar. Lulled into a false sense of security by a long period of low interest rates and stable economic growth, ordinary people, bankers and financial investors borrowed vast sums and gambled that house prices couldn't fall. And of course we know they were wrong. And the notion that a whole society can get rich by swapping more or less the same stock of houses among each other at ever more inflated prices is a delusion. Yet even now, it has a vice-like grip on the British imagination. And since the banks were raking it in, the economy was booming, tax receipts were pouring in, the pressure to leave that golden goose alone was overwhelming. And of course, bankers' political donations and lobbying also helped. Above all, politicians came to believe that what was good for Wall Street was good for America, and what was good for the city was good for Britain. Now fast forward to today, and what do you see? House prices are soaring again. In London, they are 16% higher than a year ago. A typical UK home costs more than twice what it did a decade ago, and a bit more than it did in August 2008, the month before Lehman Brothers collapsed. The stock market has bounced back too. Despite its recent turmoil, it's still just above where it was 18 months ago. The blue line is 18 months ago. And then you see, while Goldman Sachs' price has taken a knock since it was accused of fraud by American regulators, its stock price too is back to where it was before Lehman Brothers collapsed. So if you look at the housing market or the financial market, it's almost as if the financial crisis and the recession had never happened. And then you look at the real economy of output and jobs. Now yes, the economy is growing again. It's fractionally bigger than it was at the end of 2009. But it's still smaller than a year ago, it's more than 5% smaller than two years ago, and it's more than 10% smaller than it would have been if it had carried on growing as fast as it was from 2000 to 2008. And because the pound has collapsed against the dollar and the euro, we're all much poorer than we thought we were, as everyone who's been abroad knows all too well. And then of course, nearly 1 million people have lost their jobs. 2.5 million in total are unemployed. And the only silver lining is that unemployment has so far risen much less than in the 1980s or in the 1990s recession. And compared to other advanced economies, Britain's unemployment rate remains relatively low.